Hey everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at the market outlook for this particular week. Last week we couldn't put a video, hence in this video itself we are going to discuss what exactly ended up happening to the market last week, what happened to our trade, which was the easiest day to trade and which was also the hardest day to trade. On top of this, we are also going to discuss some economic and finance related topics. So before moving on in this video, I will tell you little about the Target app update and also little about Traders Conclave. So coming to the Target app, so we are in the final phase of beta testing. So most likely in the next week or two, so we'll be done with the beta testing stage and we'll be releasing it to the public. So we have already made all the necessary preparations required for the stable version release, and this might be the final stage of beta testing. So if you're interested in accessing the Target app and want to be one of the beta testers, you can write a mail to contact@optionables.in, and if you're already one of the beta testers, you can definitely drop your suggestions and feedback to support@optionables.in. Your inputs will be very valuable for us to improve our app. So now coming to the next part, that is the Traders Conclave. So we have already mentioned about this in the previous video also. So Traders Gurukul is conducting a Traders Conclave from 23rd of September up till 25th of September. In this event, there will be 9 speakers and around 50 mentors, and in 3 days we'll be discussing everything related to trading. So now you might ask, is it similar to the conferences which we get to see? The thing is, apart from the normal sessions of trading and also networking sessions, we also have a lot of fun events in this particular conference. One of it is Turtle Portfolio Manager. So all the participants will be given 1 lakh in virtual cash. So they can use this cash to go buy or sell stocks in a trading ring setting. So how we had similar to in 1970s and 1980s, there will be a trading ring setup. So people can actually go and trade stocks how they were trading back then in 1970s and 80s. Not just that, so every end of the day they get to change their portfolio. So the thing is, let's say you have purchased one particular stock, you can sell that and buy one more stock, and there will be continuously news which will be flowing out there. So depending on whether it's a positive news or a negative news, you can end up changing your stock. And finally, if you end up in top 3, you will receive real prizes worth 1 lakh rupees. And now we also have one more event which is known as the 5-minute superstar. So in this particular event, so after each session there will be a short Q&A session arranged. So depending on how your performance is in this Q&A session, you will also be given some rewards. And finally, you will also be getting access to Kautilya Knowledge series. So it is a series where it has topics related to fundamental analysis, technical analysis and price action. So you will be getting this entire series also for free. This event will be knowledgeable as well as fun, because so this event is spread over 3 days and there are only 9 speakers. That means after 3 sessions every day, we will have a lot of free time for actual conversations and networking with all the traders around. And apart from that, we will also have a lot of fun events which will be going on side by side. Overall, it will be a good event. So if you're interested, you can definitely check it out using the link in the description below, and you will also end up getting 10,000 rupees off on your registration. And I also hope to see you guys in the event. Now let's quickly move on to the market summary and see what exactly happened in the last week. Last week, the market more or less consolidated in the broader range. So when you actually look at Nifty consolidated between 17,200 and 18,000, whereas Bank Nifty consolidated between 38,000 to 40,000. So it was a very broad range. We got to see a lot of volatility this week. So the thing is, on Friday, we slightly ended up higher, but on Monday we opened with a huge gap down, and within the next 2 days we were completely able to recover what we had lost on Monday's gap down. And also on Thursday again we more or less consolidated. When you look at the entire week, even though the movement was very little, we saw a lot of volatility. So the thing is, Tuesday was the best day where markets almost rallied around 3%. Bank Nifty rallied around 3% or close to around 1,200 points. So when you actually see, even this week we have both buying from FIIs and DIIs. So FIIs ended up buying to the tune of close to around 2,000 crores and DIIs ended up buying close to around 500 crores, but both were net buyers. So the thing is, we are in a make or break moment now. The thing is, global cues are extremely strong and the market wants to head up higher. But on the other hand, we have the global cues which are actually pulling us down. So now I'm going to discuss little about the finance and the economics that is related to the US job data and also the India's GDP data. So first, coming to India's GDP data, India's GDP this particular quarter ended up growing close to around 13.5%. So even though the expectation was around 15% and we were slightly below estimates, still 13% is an excellent growth. So India also pipped UK to become the 5th largest economy in the world. So if you actually go back to 1947, where we got independence from UK, Indian economy was around 9,100 crores. The GDP of Indian economy was around 9,100 crores. And today, if you see, we are almost around $3 trillion, which is close to around 2.2 crores. So you can see the amount of growth we have seen over time from 9,100 crores to 2 crore. So that is the level at which the Indian economy has grown. And if you actually even look at the outlook for the future, definitely India stands at a sweet spot, and that's the reason we are getting so much foreign funds into our country. If you look at the other nations, the FIIs, so especially the institutions from America, is actually pulling out money from all other countries, especially from Europe, because the interest rates in US is going up and they are getting favorable returns on their investments in US itself. So why would they actually go and put in some other country like Europe, where the interest rates are low and even the growth is extremely low? So they are pulling out money, and their favorite spot right now is India, because India is the largest democracy, the fastest growing economy. So after COVID, China has slowed down quite a lot. The GDP growth is just around 2 to 3%, whereas India's GDP growth is expected to be around 7 to 8%, even moving forward for the next 2 to 3 years. So that's the reason we are seeing a lot of foreign fund inflows. So even though there was a lot of selling which happened previously, right now we are seeing that a lot of funds are actually coming in. If this continues, where we end up growing very fast and inflation is also under control, then we might also see a stop on rate hike. So the thing is, even RBI along with Fed is increasing the interest rates. So this might come to a halt if the economy does really well and inflation also comes under control. And this would be really good for the economy, and this would also attract even more foreign funds coming into India. Given the current scenario, if the global sentiments, which are so negative, turn even little bit positive and the same amount of positivity continues in India, definitely all-time high is not far for Nifty. So maybe in the next 2-3 months, we can definitely retest all-time high around 18,500. So time will tell whether FIIs will actually support and push Nifty towards 18,500 or not. So now coming to the second data, that is the US job data. On Friday, we had the US job data, and that's the reason on Friday even the premiums didn't end up decaying, because if you remember previously there was a Fed meeting, and after Fed meeting the US markets had fallen around 4 or 5%, and that's the reason US job data was also very keenly watched on, because any big surprise over there will definitely influence Fed in the next meeting. This month, US added close to around 3.15 lakh jobs, and this was in line with estimates. The estimate was around 3.2 lakh, and right after this news, the European market started to perform really well. DAX went up as much as 4%, even CAC and FTSE were up by 1.5 to 2%. So following this, even US markets ended up opening higher, but they couldn't sustain. So as they opened, immediately the profit booking started. So they went up almost around 1 to 1.5% higher, especially the Nasdaq. But as the profit booking started, they gave up all their gains. Not just that, they also went to 1% negative and closed 1% negative. So following that, it was quite confusing because the global cues were completely mixed. We had on one side the European markets, which were trading heavily positive. On the other hand, the US markets, which ended in the lowest point of the day. So based on this, it was quite confusing where exactly our markets would open. So SGX Nifty was indicating a 22-point negative or a flattish start. So based on what SGX Nifty indicated itself, today we ended up opening. So even though we ended up opening in green, it was very minor green. But as we opened, we headed higher and closed almost at the day's high. Nifty closed almost around 17,660 and Bank Nifty closed around 39,800. So these two are extremely crucial levels for Nifty and Bank Nifty, especially Bank Nifty. Bank Nifty has given break out of the swing high, and that means we'll have very good trading opportunities based on these levels. So this is something which we'll be discussing in the market outlook and also the trade idea. So I'll be suggesting what exactly we're expecting from Nifty and Bank Nifty, and also what trade idea we are actually looking at. So now we'll quickly discuss about the trade in detail as to what happened last week. Last week we actually ended with slight negative, around 2 lakh negative, but the thing is most of the loss came from futures. So options we actually performed quite well. Overall with options we ended around 4 to 5 lakh positive, but with futures we ended close to around 7 to 8 lakh negative, because of which overall week also turned negative. And one more thing is we ended up closing all our futures. So if you remember, we had IT futures, that is TCS, Mindtree and even Jubilant Foods. So we ended up closing all the futures, and right now we carry 0 positions in futures, because if you remember, so we were doing quite well this particular quarter. Then due to a technical glitch we ended up losing close to around 22 lakh, and on top of that, because of futures also we had lost close to around 10 lakh. So our risk appetite was reaching, and we didn't want to give up on all the profits that we had made this particular quarter. Hence we came to a decision of closing all our future trades and continuing only with options for this particular quarter. So now we'll talk about the easiest and the hardest day. First, coming to the easiest day which we traded last week was Tuesday, because Wednesday was a holiday, and on Tuesday we got to see a fantastic rally in Bank Nifty. FIS also ended up buying close to around 4,500 crores, and Bank Nifty rallied all the way from 38,100 to 39,500. So it was a very good rally in Bank Nifty, and because of complete one-sided rally we got very good DK with our put legs, and we ended with good profit. So first, coming to the easiest day to trade, hands down it was Tuesday, which is 30th of August, because market started around 38,500. From there on we saw a fantastic rally of close to around 1,000 points. So initially we were at a short straddle of around 38,700. Later very quickly the call legs hit the stop loss. Then we started adding some additional puts as the market broke 39,000. So somewhere around this level we started to add some additional puts. So from there on, it was a pretty smooth ride. So the market almost ended the highest point of the day. So we got brilliant TK. And to be honest, this was the most easiest day to trade, because market was heading just in a single direction. And after the call legs hit the stop loss, we didn't end up doing any adjustment. Rather, we started adding some additional puts as the market broke 39,000. We got fantastic DK towards the end, and we booked close to around 8 lakh rupees just from options on Wednesday. And the hardest day to trade was the expiry day. So even though we ended up losing more on Monday and Friday compared to the expiry day, undoubtedly the expiry day was the hardest. So I'm going to explain why exactly we felt Thursday was harder to trade than Friday. So coming to the hardest day to trade, it was the expiry day, which is Thursday. So even though we ended up with a slight profit, it was very hard to trade on that day. It was more or less very frustrating. So the reason is we opened with a huge gap down on Thursday. So Wednesday was a holiday due to Ganesh Chaturthi, and we opened with a huge gap down. And from the low, so we almost opened around 700 point gap down. From the low, we bounced close to around 850 points. So after bouncing up 850 points, we further fell close to around 700 points, and later again bounced back around 250, 300 points. So it was a very hard day to trade, because as we started moving towards the end, so you can see especially after 1 o'clock, the market was extremely volatile. So the market actually came down, went up, again came down, again went up. So the reason is post 1 o'clock, the premiums will be very low. And especially when the market is so volatile, especially towards the end, it becomes very hard for us to trade. And not just that, so morning as the market started to shoot up, initially we ended up selling 38,500 put option and 39,500 call option. As the market started to shoot up, we ended up selling some 39,000 put option. Again, it went up, so we sold some 39,200 put option. And at this point, we had to cut our calls because no matter how many put options we were selling, so it was not able to compensate to the amount that we were losing with the call options. So then we had to cut our calls. And after we cut our calls, slowly over the next couple of hours, the market started coming down. As it came down, 39,200 put options and 39,000 put options started to bleed again. So the thing is, we had already started the day with a loss of close to around 1 lakh or 1.2 lakh. And from there on, while this entire thing happened, we went to a loss of close to around 3 lakh. And then what ended up happening is as the market started to consolidate around this range, so slowly we started to recover. So even up till here, we were slowly recovering and we came back to zero. And at this point, again, the market started to fall. And again, we ended up coming to a loss. From a no profit, no loss situation, we ended up coming back to 2.5 lakh again. So after this fall, we sold some put options at 39,000. And after the market came up, we did some straddles at 39,300. Somehow, we ended up around 1.2 to 1.4 lakh profit with options on Thursday. So the thing is, even though we have made a higher loss in options on Friday, so I would still prefer Thursday to be the toughest day. The reason is Friday, there were a lot of mistakes which we ended up doing as traders, and that costed us a lot. So it was nothing with respect to the market, but the mistakes which we personally did. So we went slightly directional, which I already explained in the video. So that costed us quite some amount. So this was the hardest day to trade, and these were the reasons why we found it extremely hard. The main reason is the premiums was very low and the market was very volatile. So just now we saw what was the easiest day and the hardest day to trade last week. So now we'll be quickly moving on and looking at the market outlook for this particular week. So since today is already Monday and today the US markets are closed on account of Labor Day. So we still have Tuesday, Wednesday, Thursday and Friday. So I'll just give you a broad-based market outlook and also a simple trade idea. So now let's quickly move on to the screen recording. In this video, we are going to discuss market outlook for Nifty, Bank Nifty and also some trade ideas. So first we are going to start off with the chart of Nifty and chart of Bank Nifty and later also move towards open interest. And finally, we are going to discuss some trade ideas. So when we actually look at the chart of Nifty right over here, so as we discussed in the initial video, we do see a broad-based consolidation between 17,200 and 18,000. So we can see that right over here. So Nifty is consolidating between 17,200 and 18,000. The thing is, banking sector is really strong, whereas on the other hand, the IT sector is pulling down Nifty. So that's why even though banking sector is almost on the verge of swing breakout, Nifty is quite far away from its previous swing because the IT stocks are pulling it down. So because of this reason, I do expect the consolidation to continue even this week. So I do not see any breakout coming above 18,000 or any breakdown coming below 17,200. I do expect this broad range consolidation between 17,200 and 18,000 to continue. So the thing is, till one of the side is broken, either 18,000 or 17,200, we won't be doing any kind of a directional trade. So we would definitely consider doing some short straddles at 17,600 because we do expect the consolidation to continue and not a big move on the upside, not a big move on the downside. And because of this, we prefer doing a 17,600 short straddle. When we actually look at the open interest for Nifty, again, you do see the PCR ratio is also around 1.1. That means there is equal amount of calls and puts. And when you look at the OI chart, at higher levels, you do see very strong call writing. And at lower levels, there is very strong put writing. And there is some good amount of short straddles or good amount of activity around 17,700 and 17,600. And you can see right over here, good amount of activity both in puts and calls. So for this reason, I do expect the market to consolidate between 17,800 and 17,400. So that is between this broader range is where I expect the markets to consolidate. So for this reason, a simple 17,600 or a 17,650 short straddle is something that we have in our mind. But more than Nifty, we prefer trading in Bank Nifty because we have better opportunity right over there. So just to give you a broader outlook, we are expecting Nifty to consolidate between 17,200 to 18,000 even this particular week. Because of this consolidation, we also prefer doing some short straddles at 17,600 or 17,650, small quantity of short straddles. But on the other hand, when we actually come to Bank Nifty, so here we do see better opportunity. As I already told you, Bank Nifty is relatively looking stronger when we compare it to Nifty. So previously, in the previous swing, Bank Nifty made a high of close to around 39,800. From there, we saw a rejection. So I have opened the daily chart. And after that, for almost around 10 to 12 days, Bank Nifty has consolidated in the broader range of 38,000 to 39,800. So this is the broader range in which Bank Nifty has consolidated. And finally, today we were able to close above 39,800. So this was a very strong resistance for Bank Nifty, and Bank Nifty tried to cross this couple of times, but it failed. And finally, today we ended up crossing 39,800. So even though right over here you see 39,754, that is the last traded price, but the close ended up happening above 39,800. So the thing is, in case if we are able to hold 39,800 tomorrow without giving up this level, that means Bank Nifty's trend will definitely be bullish. So from here, I do expect Bank Nifty to move towards 4,500 or even 41,000 if we are able to hold 39,800 tomorrow. So, given this, Bank Nifty is holding 39,800 tomorrow. There is a trade idea. In case if Bank Nifty does not hold 39,800, even then we do have a trade idea in mind. So let's assume that Bank Nifty tomorrow ends up crossing 39,800. Then definitely we would consider doing a 39,700, 39,800 bull call spread. So when we actually put this on strategy builder, it would look something like this. So we would have almost 1:1 risk to reward. But in case if we are ending above 39,800, so we'll be making almost 1,200 rupees per lot. Last week also, we had suggested a bull call spread around 38,000. So that trade actually ended up giving us a profit. So we would again do a bull call spread, or maybe even go few lots in futures if we are able to hold 39,800 even tomorrow. So when we are going long above 39,800, so we can keep a very simple stop loss of 39,700, and any close below 39,700 we can just square off. So when you actually look at the risk to reward, so on the downside you are just taking around 120 point risk, but on the upside you have a reward potential of almost around 700, 800 points. This is a scenario given that Bank Nifty ends up closing above 39,800. In case if Bank Nifty actually starts coming down, so then let's see what is the trade idea we have. So when I open the open interest chart right over here, you do see a lot of activity in and around 39,500 to 39,800. A lot of call activity and lot of put activity. So because of this, I would definitely consider doing a 39,500 short straddle in case if we are unable to hold 39,800. So if we start coming back towards 39,500, then definitely I would end up doing a 39,500 short straddle. So these two are the ideas what we have for this particular week. And in case if we end up coming down, I do expect a broad-based consolidation to continue between 38,000 to 39,800. So along with that, I also have one more small trade idea in ICICI Bank. Given that tomorrow Bank Nifty is positive, and you can see that ICICI Bank is also consolidating in the range of 850 to 890, and any close above 890 will definitely give you a very nice opportunity to go long. So the thing is, it would be a breakout after a consolidation, and if Bank Nifty is also positive, for Bank Nifty to go up, it should either be ICICI, HDFC or Kotak Bank which would be contributing. And my bet would be on ICICI this time because it is looking much stronger than either HDFC or Kotak Bank. Even this will give you a very nice opportunity to go long in case if you are closing above 890. So this is the market outlook as well as the trade idea for this particular week. Just to summarize, in Nifty we are expecting the broad consolidation to take place, and we would consider doing a 17,600 or 17,650 short straddle. In Bank Nifty, in case if we are closing above 39,800 tomorrow, then we would take a bullish trade and our stance would be bullish. In case if we are not able to hold and if we reject from that level, then we would take a range bound stance and we would end up doing a 39,500 short straddle. So that is the trade idea what we have. And one more thing what I would like to add is this is just a trade idea what we would be doing, and this is in no sense a recommendation. So we are not SEBI registered and we are not even authorized to give any trade recommendations. So that's the reason I would request you to consult your financial advisor before taking any trade. In case if you are also looking for daily market outlook, you can just visit optionables.in/blog, or even if you come to our main website optionables.in, you can just go to the blog section. Here just click on market overview. Every day we'll be updating the market overview. So you can simply click on the market overview. So it will be available before 9 o'clock in the morning, and we would have explained in detail with the chart what is the outlook for the market that we are expecting and what might be potential trades that we will be looking at. So everything will be explained in detail. So do not forget to check this out. Also do drop in a review in the comment section. What more do you like to see and whether you're happy with the market outlook or not. So since we are not coming up with daily videos, so this is one thing which we are doing to fill the gap, where we are going to write blogs of the market outlook of what exactly we are expecting for that particular trade day. So with that, we also come to the end of this video. I hope that you guys have liked this particular video and also got some insights. If so, do not forget to hit the like button, share this video, and also subscribe to Optionables. Thank you so much for joining.